There are various items beside money. I mean, those days we used to say gold dinar. Dinar is gold coin. We used to have silver coin. There are other instruments which are also not allowed to be used, right? Just such as dates. There are approximately 4 more, right? These are used as money, or as instrument, right, during the day of the Prophet Muhammad sallallahu alaihi wasallam. Right. Now the third one, right, which is also the basis, a very important point, risk sharing, because interest is prohibited. So how do we go about it? Now remember, in the Quran, Allah subhanahu wa ta'ala told us, أحل الله البيع وحرم الربا. أحل الله البيع وحرم الربا. Now I'll translate the second part first. Allah has made interest prohibited. Now, prohibited means we cannot use any of its kind. But look at the sentence. He has given us an alternative, is to trade, right? Is to get involved in businesses. وَحَلَ اللَّهُ الْبَيْعَ, right? Which means that we are allowed to trade. Now use our imagination, use our innovativeness to trade, all right, but to avoid interest. Now this is why when you look at the third point here, risk sharing, all right. Now when you look at the bank today, the bank is not sharing any risk. Now I'm just like Mr. Brown who's sitting on a chair. You walk to me, Mr. Brown, I need 100,000. I look at your credential, I look at your collateral, fine, you have good collateral, all right, you can pledge an asset with me, all right, and I issue you 100,000 with a specific margin. Now what kind of risk do I share? Now someone may argue with me here from the conventional banking that yes, there is some risk. Now I definitely agree with you. There are risks. In fact, there are 5 types of risks when you look at the banking system: business risk, financial risk, liquidity risk, right, operation risk. Now the risk, the main risk here has been already taken care in conventional banking. You are not sharing any risk, all right, beside those 5 risks. Although it's not easy to run a bank, I definitely agree with the conventional bank. Now with all respect, I'm not here to make any comparison with conventional and Islamic bank, but we are trying to illustrate some of the differences. Now again, prohibition of a speculative behavior. Now again, in the Quran, Allah has mentioned that gharar, we have to stay away from as excessive insanity. Excessive insanity. Now you look at what I have written here. Islamic finance discourages holding and prohibits transactions featuring extreme entities. Now gharar means excessive entities. Now this is why today when you look at some instrument we have in the conventional system, like derivative, conventional insurance, betting, they all carry these excessive entities. Now definitely those contracts or those instruments which I have just mentioned, all right, those are bilateral contracts that you enter with these parties. Now once you entered with these parties, you have a bilateral agreement, all right, because in Islamic finance, all right, you could enter into a contract. If it is a unilateral contract and as entity exists, then it is allowed, all right, it is allowed. Now, sanctity of contract, all right, this is very, very important as well, all right. It's just like, unfortunately, when you buy a premium today, and you want to cash the premium or you want to get a rebate on the premium, you walk into the counter, let's say the insurance, they said, I'm sorry, there's a small clause written here, all right, you're not allowed to rebate or to get any rebate or to cash this agreement. Now Islamic finance, All right, it is very, very important to have the contract very well defined. In fact, it is the responsibility of the banker or the legal advisor of the banker to spell out every detail in the contract. Right? It has to make sure that you understand every detail in the contract. All right. Now, what I've just mentioned in the previous slides, all right, these conditions are not new. All right, we used to have a financial system based on Islam, all right, during the medieval history of Islam, which was working very fine. All right. In fact, according to some Westerners, all right, the banking system was first introduced during the medieval time. All right, and I'll share with you some example. Look at the current account, for example. Now, I don't know how many has a current account here with a conventional bank. What is a current account? A current account is you deposit money inside a bank, and the bank offers you a checkbook, and you are charged on this checkbook, and the bank has to honor it every time someone presents a check to the bank. Now, this is a kind of Qardul Hasana which you make with the bank, all right, which has been existed many years ago. It's not something new, all right. In fact, it is very similar to what we have in Islamic finance, but the main difference is the amount which is deposited with Islamic bank will be invested in Sharia compliance. Unlike the conventional bank, it could be invested in any activities. So these are the main differences. Now, when you deposit money with a current account, with the bank in a current account, all right, at the same time, your money is safe. All right, it is in the safe custody of the bank, so anytime it will be paid back. So this is again based on what we call the trust agreement or the trust contract in Islam. Right? Now, Sharia approved activities, certainly when you look at Islamic finance. Now, again, every transaction has to be Sharia compliant. What do we mean by Sharia compliant? All activities, all investment has to be halal. What do we mean by halal? Which means you can only invest in any activities which is approved in Islam. Like we can't invest in casinos, we can't invest in weapon of mass destruction, we can't invest in alcohol, all right? So these are prohibited activities. Now, in fact, today, when we look at this point here, we do have ethical investment in US where non-Muslim purchase ethical stock. Now, these ethical stock have the same criteria, what you see here. All right, they don't invest in pornography, in casinos, in alcohol, all right, because some of these people are very concerned with these activities. Social justice. Now, in fact, if I would have to summarize the whole points here, let me just show you the last one. I'll come back. I will use the word justice because when you look at Islam, what is Islam about? It's about justice, justice for everyone, right? And the system, of course, must be able to give us to make sure that we have a just, equitable of distribution of wealth. Now, the last one, which is also very, very crucial in Islamic finance, is that the asset backing principle. Now, this is very different from conventional bank. In fact, when we talk about Islamic finance or Islamic financial system, we don't only look at the banking and the insurance, we also look at the Islamic capital market. Now, Islamic capital market is an integral part of the Islamic finance, and it also complements Islamic banks and Islamic insurance. Now, when we look at Islamic capital market, some of these products has to be asset-backed principle, which means that when you want to raise liquidity, you can't simply raise liquidity on indebtedness. You must have an asset behind. Now, this is the very foundation of, or not the very foundation, or one of the principle of sukuk, that it has to be asset-based. Now, I've mentioned earlier that it is recognized that the Islamic banking, or Islamic bank, or the function of a bank, all right, was practiced, was in operation during the medieval time of Islam. In fact, one of the evidence